Good morning, everybody, and this is your Dow Jones technical analysis for today. So, had a bit of a meltdown yesterday, and then kind of just went into a range. If you look to the left, there's quite a bit going on here, so it was to be expected. I think what you need to bear in mind is options expiry is today, and I just want to have a look to see if that's changed much. Nope, not changed much. So the two levels are basically 35,500 and the puts are at 3,500. 3550, sorry, is the calls, and the puts are at 3,500. So let's just say 3,500 is where everything is. So right now, the bulk of the bears are in the money. So they are in the money because we're quite far below 3,500. 3,500 is sort of in the middle of this range. So the bulls are not quite in the money. The bears are sort of in the money at the moment. Yeah, so I think at the moment you're probably going to find a still range around in these two levels that we've got. So the structure to the downside here is 34,785. Sorry, it's 34,798, and then we have 35,191. So a couple of things to really pay attention to. Firstly is we have not quite diversions on the one oscillator, but the second oscillator there's definitely diversions on. So that's the first thing, and this is on an 8-hour chart. We've got a grouping of the oscillators on the 8-hour. Whenever you get a grouping of the oscillators on a high time frame, take it seriously, especially when it is in the opposite direction of what your trend is. So the trend is up, and you have a fairly solid trend line here which is in play. So this is kind of bottom of channel, so I would anticipate a bit of a move to the upside. So the open interest is really low on Dow Jones at the moment. I think everybody concentrates on the S&P 500 rather, but nevertheless I suspect we range around in this area. So firstly, just look at price action. We've got a nice big engulfing bar here on the 8-hour. So we've got a bit of a pin bar. I prefer that to be a green pin bar, but it's a red pin bar. So at the moment for me this is just a range, and a bit of a messy range at the moment. You can see range bar, you can see sellers coming in off the top, buyers coming off the bottom. I think the fact that we had the meltdown and then the buyers stepped in is fairly interesting, and the next step, next logical thing we need to wait for is a break of this trend line. So put quite simply, I am sitting quietly on the sideline still. So wait for this volatility just to calm down a bit, and then we'll look for the structure. So if you look at the hour, the structure is very clear. In actual fact, it is bearish. So you're looking for a move to the downside. Bigger trend is up. I don't like shorting the US markets at all. So I see the pullbacks as just opportunities to buy into it. And that's exactly what I'm looking at here. Waiting for some signals, and I want some proper signals to come through which are going to tell me it's time to buy. Options expiry is today, so typically on a Friday with options expiry you'd have either a massive move in one direction or other to where the bulk of the options are, where those strike levels are, and then the market just kind of fizzles out and goes quiet. So yeah, so you could have a bit of a pump and dump, or you could just have just muck around in the range between the two levels I've given you. So that's kind of the view that I've got at the moment. I don't see anything else. So for me, money in pocket is a fantastic trade. You'd be surprised how much money you save when you keep your money in your pocket when you're undecisive. So that's my view today. Keep my money in my pocket, not looking at any of the indexes. We'll wait for some decent structure after the expiry. So we'll pick it up on Monday. Anyway, with that, hope it helps you somewhat, and enjoy the weekend. We'll catch up with you on Monday morning. Cheers for now.